I want to do a quick update on the stock market. I think it's time for caution. As we were building this rally, all the way up, I kept seeing people trying to call a top, getting stopped out, just losing more and more and more money. Uh, and I, been saying for a while now that this rally was in anticipation of reopening the economy. And then once that reopening was complete or mostly complete, then reality would set in, and we would probably have to make a trip um, back down to test. Um, I don't know that we're going to undercut. Maybe the Dow might undercut or the Russell might undercut. I doubt that the S&P will. I really doubt the Nasdaq will. But we still have another intermediate decline ahead of us and some kind of retest of this March low. And at this point here, as we moved into the FOMC meeting, retail trader sentiment had become just wildly bullish. And, all of the people that were trying to call tops all the way up, these people finally gave in and became bullish. And that was, the signal that we were probably about at a top. So I noted in one of my previous videos, we just went ahead and took profits on our positions. When the NASDAQ made that, got to the double top, we didn't catch the exact top, but it's impossible for me or for anybody for that matter that I've seen over my 20 plus years of trading to pick exact tops with any consistency. But we got close enough. We made a lot of money, and I advised people that were following me that if you were happy with your gains, then go ahead, lock them up, and then we could sit on the sidelines and wait for the inevitable intermediate decline. It would come sooner or later, and then we would have another, potential buying opportunity. So anyway, um, I I'm a bit nervous that this might be the beginning of the intermediate decline, and that would mean that this daily cycle right here is potentially left translating. And that's what I would expect to see if this larger intermediate cycle is only going to have two daily cycles embedded within it. If that's the case, then this second daily cycle right here would need to left translate and then move down into a larger degree intermediate cycle low, and probably retest, like I said, to some degree these March lows. So I'm a bit nervous that that may be what is starting here today, is that we're left translating this second daily cycle. We're starting the intermediate decline. I've said this before as well. They usually, almost always, not always, but almost always, they will unfold as at least an ABC pattern. So, at some point we'll come down and, we'll get a bounce, and then everybody will be convinced that was it. And then it rolls over and comes down deeper. And that's exactly what happened here. I had one particular troll, that just email after email chiding me that I had missed the bottom and missed was missing the rally. And then of course we get this C wave down, and I imagine he blew out his account on that C wave decline. So um, I think you need to be cautious here. If you've made enough money to be happy, then don't be afraid to take profits and just get on the sideline. And then we're about 15, I think 15. Oh no, we're 19 days into this daily cycle. The daily cycle low, the timing band is between 35 and 45 days. So we've got about maybe 15 to 20, 25 days before this daily cycle would be to bottom. I think it's appropriate to just sit on the side, take your profits, sit on the sideline. Let's see where this goes. And then, somewhere around day 35 to day 45, we'll start looking for a daily cycle low, maybe maybe, we get a bottom here and we bounce and we come back up and we get a full test of this and that daily cycle low comes up here. So maybe this looks something like this. Oops. See if I can draw this in. It's possible that maybe it looks like this, and then this turns out to be our buying opportunity. It's also possible, and I think you want to protect yourself against that this might look like this. All right, so you want to make sure you avoid this scenario if this is what's coming. You don't want to get caught and have to ride this all the way back down, because there's there is always an intermediate decline. There always is, and this intermediate cycle here was really stretched. It had 5 daily cycles embedded within it. So very often a short cycle will follow a long cycle, and in that case, then you would kind of expect there to only be 2 daily cycles embedded within this intermediate cycle. So there is risk that this scenario could play out. So I think now, you wanted to ignore everybody calling tops all the way up, 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 and up and up now. But now I think you want to ignore everybody that's saying, this market is unstoppable and it's going to the moon. I think now you want to be cautious. I'm not big on shorting. It's very hard to do, and with the Fed pumping trillions of dollars, there's a very good chance that the pattern could be that first pattern that I showed you that bottoms pretty soon, and then we make higher high and fully test this. So I'm not at all interested in trying to short the market, but I am very uh, interested in not getting caught in this if this is about to happen. If this is what is starting, I'll just be happy to wait. 15 to 20, 25 days. We get into the timing band for that daily cycle low, and then at that point, I'll know whether this was an intermediate decline or whether we got to bounce pretty quickly and another high, and then the daily cycle low is up here. And if that's the case, then the intermediate decline is going to come with a third daily cycle, and that would be probably in September. But right now, I'm very nervous that this might be starting. So I want to make sure I avoid that. And we've made plenty of money. So I think it's time to get on the sidelines.